Good morning, everyone. Thank you for coming in. My name is Warwees Holt. I am the financial coach at SDC. And just to give you a little bit about my background, I am a retired banker. I was in the financial industry for about 30 years. I worked for several financial institutions within the Milwaukee area. Started in the collections department, and my final position was president CEO of a credit union. And one of the things that happened in my reign as president of the credit union is that I was on a commission for betterment of different financial issues for lower income people. And once a month, or once a quarter, I should say, we would go into up to Madison and talk with the legislators. And one of the things that really interested me and still does to this day is the payday lending. And I did some research one day. I was leaving church. My church is on 60th and Bradley. And from 60th and Bradley to 91st and Brown Deer, there were 6 payday institutions. So that gives you an idea of where they are located. I live on the far northwest side of Milwaukee. Actually, I live in Washington County, and I've been there for 22 years and I've never seen a payday lender. So they are in the neighborhoods that need them not to be there the most, but yes, that's where they are mostly populated. Uh, I had to choose between a couple of topics today because this was I'm kind of filling in for someone. And the two topics that I gave them was dealing with debt during the coronavirus pandemic. And I was going to give you some tips on, how to ease the impact. And then also how to protect yourself financially from the impact of coronavirus. But listening to all the presenters, um, they've made it seem like that low income people were really affected by the coronavirus. And yes, they were, yes, they were. But they've always, been affected with the status of being low income and poverty. The COVID-19 pandemic did not create racial inequalities. It just further exposed them. And so what I did trying to prepare for this workshop was I looked at statistics and statistics and statistics. And all of the statistics say the same thing, that Black and brown people are on the low end of the totem pole when it comes to income, when it comes to housing, when it comes to employment. Well, I wondered, where they got all of these statistics from. And have they really got out and surveyed people that are living in this poverty day in and day out? I think working at SDC, I really am aware, especially during this pandemic, because I come into our office every day and it's full of people that are trying to get some assistance with their rent. And even personally, and I deal with people that are low income or that are having credit problems. I've been doing that for years, but I didn't know that it was as great as it is. There, people out here are really, really suffering. And now the pandemic like, I said earlier, it's just exposed all of that. So I'm gonna give you a couple of statistics that I found, and it's about the financial situation of African American. It says that it lags behind um, most of the U.S. population, and we all knew that. The statistics that they give, and they said, and whites in particular, I love what our commissioner had said. Similar economic indicators illustrate the gap. While 66% of African Americans report that they are doing at least okay financially, the comparable figure among whites is 78%. Median household income among African Americans was 35,400 in 2016. Median for whites was 61,200. That's a pretty wide gap. African American households' net worth was 17,600, and the white wow, the white net worth was 171,000. Wow. Inequality, I mean, those numbers pretty well speak for themselves. And it even comes when it comes to educated Blacks. They still are not making the income that their white counterparts are. And why is that? It's just so hard for me after doing all this research to really let all of this sink in. It is, if you were in the auditorium, when our commissioner was speaking, and the way he broke it down within the Black and the white and how those two words came to be, it actually makes a lot of sense. And it said Black Americans have faced the sharp rise in unemployment and wage loss due to the pandemic. Well, Black Americans have always dealt with unemployment. They've always been the group that has the highest unemployment. It also says that it impacted their savings habit. Well, a lot of us haven't been able to save as much during the pandemic because maybe we got laid off, or maybe our hours are cut, or something similar to that. But also during this pandemic, prices are rising and we're still making the same income. Black adults who said that they were typically able to save money say that they've been able to put aside less than usual. Well, if you look at the degree of the way savings has been statistically counted, is that for every dollar that is made by a white counterpart, we are only making, Black and brown people are only making, or I shouldn't say made, are saving. That's for every dollar that our white counterparts are saving, we are only able to save 44 cents. That's a big deficit in our savings account right there. So how do we deal with that during the coronavirus pandemic? I work with people that are low income, or they're having some problems with debt. And I always tell them the very first thing you want to do when you know that there's a problem is that it is your responsibility to contact your debtor. If you owe the money, you should be calling them to contact them. And how does that give you an advantage? Well, number one, Wisconsin has some of the stronger consumer protection laws in the country. And now if you're calling a creditor, everything is either recorded or they have to make some type of notation. Technology, it's probably recorded. So that gives you, number one, they have to notate that you call. If you're continuing to have problems and you continue to communicate with them, they're going to be more likely to work with you because they are not having to run you down to get money that is owed to them. So that is always the first thing that I tell my clients. Just call your creditors, let them know exactly where you stand, what you're able to do, and whatever you tell them that you're going to do, just be honest with yourself and with them, that if they tell you that you got to send them $50 and you know that you only have 25 to send them because you still got all of the other responsibilities that you had, tell them, I can't send you the $50. I will send you $25. And there is no doubt that you will get the $25 in the mail when I put the date on it. The number one thing you do when you're caught making these calls is you get the name of the person that you're speaking to. I always look at the clock, you mark down the time. You create a file for each of your creditors. You mark on a piece of paper or in the blank file the time and the date and the name. I ask for their employee number. And you know, I mean, everyone doesn't have one, but I always ask, do you have an employee number? So because you might talk to John, a lot of times they are not allowed to give out their last names. So you might talk to John, ask him if he has an employee number, write that next to, write the time, for almost word for word, you put in your file what the two of you discussed, the promises you made, what he agreed to. And then you keep up your end of the bargain. Okay. I want to go to my PowerPoint here. And so it says, I have here, when contacting your lenders, you should be prepared to explain exactly what your financial and employment situation is. You're going to have to answer some questions for them. And as I stated earlier, how much you can afford to pay. Before you make the call, make sure you have gone over your budget, which we'll talk about that a little bit later, your budget. So you will know exactly how much you can afford to pay. Make sure that you jot that down in your notes. When you are likely, they're going to ask you questions. When do you think you'll be able to make regular payments again? Well, you probably can't answer that question if you don't know when you're going back to work, if you are unemployed, if you've lost your job, or, you know, if you have lost your job and you're getting unemployment, you don't know when that's going to start. So tell them that you will continue to communicate with them on a regular basis. And at the time that you have that information, that you will call them back to confirm when you will be able to go back to making regular payments. Be prepared to discuss whatever income that you have coming into your home, the expenses, which means your outgo, and any assets. The assets to me are not so important because, you know, what are you going to do? You're going to sell your car to pay a bill? I don't know. That's a personal decision that you would make. And remember, if you are going to be sending a payment, I always advise my clients to write a letter per our conversation, or hand type it, handwrite it per my conversation with Mr. John. On this day, we agreed that I would make a $25 payment for the next 4 months, and this is the first payment. And I will make a payment by this day for the next 4 months, and after which we will have another conversation. Send the letter off to them and put a copy in your file. Okay, another thing that you really want to do is you want to get comfortable with working with your bank or credit union. What I found out is that with the technology that they have now, that you can use bill pay. Once you send out that very first letter, if you want to set up these payments on bill pay and you don't want to, waste the money on a stamp or run into the post office, get set them up on bill pay. I've learned the system. I set my bills up on bill pay. I actually feel like I don't have any bills now because I go in, I say who I'm going to pay, the payments go out, and I don't have to do anything. And you have control. I do have a problem when people are having financial issues of letting people go into your account and pull out their payment. I have a problem with that because you never know what's going to happen in your household or in your situation that you might have to move some things around. So I think bill pay is a better option. It's still technology, it's still going out, but you make the decision. Your unemployment check might not come in on the day that it's supposed to come in. It might be late, the mail delayed. So you check your account and it did not go into your account. What do? You got this payment going out, and you got somebody coming in to take the payment out and the money didn't come in. You have no control over that. Now you got two problems. The payment did not go out and you're going to get an overdraft from your bank. So the easier solution for that, to avoid all those things, is for you to set it up on bill pay. So in order to do that, you have to register for access to the online banking platform of your financial institution. And then if need be, log in and take a tutorial. And then you set up your bill pay. Another thing that's important during this time is to stay on top of your credit reports. I just like to ask the question, how many of you have pulled your credit report this year? Okay, about half. All right, that's good. Do you know that annualcreditreport.com allows you to pull one free credit report every 12 months from all three of the credit reporting agencies? How does this help you? Number one, it helps to protect you from identity theft. Number two, if you are having some issues or something has gotten placed on your credit report, that is the time that you call this creditor and ask, what this bill is for, or, I thought I paid this bill, or whatever the issue is, and get that worked out so that you can get that removed from your credit report. Other than identity theft and wrong information on your credit report, it also helps you to know where you're standing credit-wise. On the annualcreditreport.com, you will not get a score, but if you do have a Credit Karma account, you can get your score from Credit Karma. What I did find out in working with the clients that I work with is that it is not a FICO score. There's a difference between the Fair Isaac credit reporting and Advantage scoring. And the scoring is anywhere from 10 to 20 points different in your favor. FICO scoring is, for some reason, it's a little lower. So if you are working on your credit, take that into consideration when you go out there and look. Now, if you are working on your credit and you want to pull all three and compare them, and you have to go back and after you cleaned up some things, they will charge you to repull again within that 12 months. Now, there are some additional circumstances that you can get another free credit report. And if you've been denied credit, it's one. Insurance or employment, and you get a letter stating that there's something on your credit report that has caused those denials, then you can write the credit reporting agent that they pulled and got that information from. You have to do it within 60 days, and then you can get another copy of that credit report this year. If you believe that there's something on your file that's inaccurate, you can also work with the credit reporting agency and to get that cleared up, and then you can get another credit report. Uh, Anybody have any questions about the credit reporting? Yes. Well, TransUnion is most widely used by financial institutions and probably car dealerships, and that's because they have to go to financial institutions to get you approved. Um, I prefer to use it when I'm working with my clients because I feel as though that the information is more detailed, but it just, it just could be that for years I just got used to using TransUnion. I see Experian and Equifax, and I can, disseminate the information on both of them. But TransUnion, to become a member of TransUnion, I know it's more expensive than the other two. Anyone else? Okay. Well, the first thing that I would say, like I said earlier, is to sit down with pen and paper. It always makes sense to put this on pen and paper. You got to look at what your income is, not what you make, what you are bringing home. And then you need two sheets of paper. One is my income and one is my outgo. And it's not like well, I think I know I got to pay my rent, and I think I spend $200 for groceries, and I think you got to know, you have to be exact in this. Budgeting is not and I think they'll deal, budgeting is an exact. You will what I tell my clients, I'll just go with this. So I tell my client, budgeting is not restrictive. It actually frees you up, because once you put down that you have $1,500 a month coming in, and you write down everything that you have going out, and you see that it's $1,400, and you know that all I got left is this $100. And what do I do to make what my outgo is, work in my income? You're going to have to figure out where you can cut costs. A lot of times when I'm working with a client and we start talking about that, and I said, well, how much do you spend on food? Oh, I don't know, maybe about $200 a month. And I say, well, does that include your trips to McDonald's? No, it does not. Does that include um, that quick run out for lunch? No, it does not. You have to be exact. Um, I do lose some clients because people that give me the I don't knows, I have a little booklet that I give them. And for the first 2 weeks after your first meeting with me, you have to write down every cent you spend. That it's not for me, it's for you. Because once you look at how much money you are spending, then you can start to get some clarity on where your money is going, and then you can get some clarity on how to budget your money. Personal experience. I'm on a diet. I decide that I'm going to do salads for lunch. They were McDonald's salads that cost me $30 a week. And it dawned on me, I'm spending $30 for some lettuce. So the next week, I go to the store, I get a head of lettuce, a bottle of salad dressing, a cucumber. I make my salads at home and I take them to work. And I had an extra $15. You know, that's the way we waste money, is because we don't know where our money is going. Now, once you get a budget, it's difficult creating a budget, because you have to have some discipline to do it. But once you create a budget, it will then free you up, because it's your money. You can move it around like you want to. I have a method that I use with some people that really have a problem. It's called the envelope method. And we put food, maybe gas, entertainment, things that you do regularly, maybe 4 envelopes. And whatever you say, that's your monthly or your weekly allotment for that, say gas, $20. You put that in your envelope. Entertainment, say that's $20. Now, if you take that $20 out of your gas envelope to go buy a concert ticket, you might have a little issue next week when it comes to getting to work. So you have to think about the way that you are spending your money. Okay. So what do you do if you experience a loss of income? These statistics say since the outbreak began, about 4 in 10 Black adults, which is like 43%, under 50 say they experienced some form of job or wage loss, compared with only 19% of Black adults over 50. That made me think, I wonder why that is. And about 3 in 10 Black adults under the age of 50 reported a cut in pay due to reduced hours and the demand for their work, higher than the 10% of the adults 50 and older who took a pay cut. So when you take a pay cut, what is the first thing that you should do? You got to then look at, okay, the budget that I was living on is not going to work with this money. I got to sit down, get my pen and paper out again, and see where I can cut these costs. Whereas people mostly don't do that. They keep living the same lifestyle, even though the income has changed drastically. In order for you to be in power of your finances, you have to take power over them. Okay? So, yes. Well, the credit union, I'm a credit union person, so that's pretty easy to answer. The credit union, first of all, doesn't have as many fees. They are usually a little bit easier to work with when it comes to lending, because as a member of a credit union, you become an owner. It's like a co-op. A credit union is like a co-op. When you pay your membership fee, you then become an owner of the credit union. And they usually have more programs to help their members. I have a relationship with a credit union here in Milwaukee for my clients. And what they have done is they have set up special program for SDC clients that if you go, if I send them to the credit union, they will open up an account for you. They will not charge you the membership fee. they will more than likely not pull a checks record on you. This is for a savings account only, because right now you can do all your banking with a savings account, but they will not pull a checks record on you. And if they do pull the checks record, as long as it wasn't fraud, they will still open the account for you. So they usually are a lot more lenient than banks. Anyone else? Okay. Um, I'm going back to what you can do to be proactive as far as dealing with your debt, during this pandemic. It says, be proactive with your credits. Like I said, reach out to them. It means more because you owe the money that you reach out and contact them. I found out when in helping people through this pandemic, some companies, some credit card companies especially, they have some hardship programs where if you do owe them some money, they will lock out your credit card, keep it open, but they will not charge you any interest, and they will lower your payment for 6 months to give you a chance to get caught up. Not charging any interest on a credit card, that's a big deal. That's a real big deal. So the only way and they will not advertise these programs. So you do have to call them and ask specifically if they have something to help, through hardship. Make sure that you contact your landlord or your mortgage holder, specifically your mortgage holder. There may be something there, a modification, or sometimes depending on who you're working with, um, they may be able to take one of your mortgage payments and put it to the back of your loan. So the only way that you are going to find out if these programs are available to you is to contact them. Any questions about that? Okay. As I said earlier, you need to revisit your budget just to see what has to be adjusted to manage the new conditions for the crisis that you're in. What can you give up? Um, I had to give up getting my nails done, okay. And I gave it up last year and I haven't gone back. So I was able to increase my savings a little bit, So just, look at your lifestyle and see what you're willing to give up. And sometimes you might not be willing, but you just have to. Your income has been cut by, who knows how much, and so you're going to have to make some sacrifice. Create a personal rule to live by that will help you manage and control your spending. I can't create a rule for you because I don't know what your lifestyle is or what your condition is, other than what you tell me, what your financial condition is. You have to sit down with your pencil and paper and really do some figuring and see what kind of rule I'm not gonna I'm not gonna have fast food nights anymore. I'm gonna do pots of chili. I can feed the kids off of that for 3 days. Instead of going to McDonald's 3 times a week, I'm gonna pull back, and they need some downtime. I'm gonna take them once a month. It doesn't have to be drastic unless the situation is drastic, but you will be surprised at how little bitty changes will make a big difference in your financial situation. And then learn what the national and local government is providing in this crisis. Most of you know that we have the rent assistance program at SDC. There are also programs all around the city that you can for homeowners. There are different loans that you can get, or free help as getting your home. If you have some problems at your home, you might be able to get free assistance in getting repairs done at your home. So you just have to be busy and start to research and see what's available for you out there. Any questions about that? Well, you know what? You really caught me off guard with there is someone you can contact here in Wisconsin. And if I can get back to you on that, I can give you the name. Federally is the FDIC. You can contact them. That's for banking. For credit unions, the NCUA. There is I can't bring it to the forefront now, but there is also a state agency that you can contact if you are having some problems with a bank or a credit union. Okay. Any other questions? Is there any particular um, items that you would like me to speak on that maybe I did not talk about this morning? I can give you some more statistics. Well, uh, that's about all that I have for my presentation. If you have no questions, okay. Mhm. Mhm. Yes, it is. Check Systems is a national organization that banks or financial institutions will send your information to if you owe them money. Like if you have consistently bounced checks with them and they have fired you from their institution, they will send that information to check systems and which will prevent, because most banks are members of check systems, and which will prevent you from getting and opening a new account with someone. Okay. Oh, yeah. The the credit union that I work with, they have build your credit loans. They have second chance accounts. Sometimes, we make mistakes or we get into situations that, you know, that we should have or maybe couldn't have avoided. And there are numerous credit unions that have those programs. Build your credit loan. I think that is just such a wonderful product, because what it includes is it also includes you on a path of savings. You will qualify for a loan in the amount of $500, maybe up to $1,500. And what they do with that money is they take that money and they will put that into a savings account for you. And you will make monthly payments on that loan until it is paid in full. And then once it's paid in full, well, not once it's paid in full, but as you're paying, they are reporting your payment schedule to the credit bureau. So once it's paid in full, you now have a good credit rating out there of a loan with a financial institution, and you also have a savings account. Yes. Ma- Two things about credit cards. Um, Say you have a credit card with a $5,000 limit, and you have run your credit card up to, let's say, 4,600. That's going to affect your credit rating, because what that is telling not only the credit reporting agencies that you are having a little problem with credit, because if you have a $5,000 limit and you're up to 4,500, you only have $500 left to go. So that's telling them by whatever terms they have is that you are not handling your credit well. So that's going to lower your credit score. And then if you make minimum payments on it, that's going to plummet your credit score even more, because it shows that you, even though you're making your payments every month on time, you have raised that credit card limit. I mean, you have raised your credit almost up to the credit limit. So they assume that you are not handling your credit well. That's a very good question. And most people don't know that. Anyone else? Yes. Well, I would say look at your financial situation and see if you are able to make larger payments on that and bring that balance down. The best way to handle a credit card, and I believe in credit cards, but the best way to handle a credit card is to pay it off monthly. And I think that everyone should have one. But my suggestion to my clients is get a credit card. Use it either for your gas, which you're going to have your gas money in your envelope or in your bank account, or your groceries. Pay that off each month with your cash. Don't use your cash, use your credit card. And you will see that your credit score will start to increase from that. If you're going to pay off your credit card, it's better to pay off larger amounts. So if you have numerous credit cards, I would say there's two ways to do that. Choose the one with the highest interest rate and continue to make your minimum payments on the other cards. Take whatever extra cash you have and choose the one with the highest interest rate and start to apply the extra cash with you. Some people get a little frustrated with that method because it takes a little longer, although it does save you money because you're not going to be paying all that interest. Then there is a method they call the snowball method of budgeting, where you take your smallest credit card and pay that off, which, I mean, I can understand that gives you kind of a sense of success that you've paid something off. And then you take that money that you paid that credit that you were paying on that card with and apply it to the next lowest balance. And then you work on paying that off. And that is what they call the snowball method of paying off your debt, which both of them work. You pay either the high interest bills off first, or if you want, some of us like immediate success, then you pay off the smallest balance first. Yes. Uh, uh, oh, I don't have a picture of the circle of how the percentages, how they determine how your credit report is. Obviously, on the circle, the biggest portion on the circle is late payments. That will drop your credit score tremendously. Another one that I had experience with this year is the age of your accounts. And I will share with you, I sold a house and I'd had that mortgage since 1991. And when I sold that house and paid off the mortgage, my credit score plummeted 40 points. I said, I was in shock. But the age of your debts, that is the next largest, it's the third largest on your circle of how your score is. So it's the way you pay your bills, the mix of credit, that's only about 10%. The age of how long you've been with the credit, on the credit bureau, and what's the fourth one? Can't think of the fourth one now. So how you pay your bills. It is the age of your credit. Oh, the amount. Like we were talking about the credit. If you have say you have $10,000 in available credit and credit that's been granted to you, but on that $10,000 you owe 9,500. That's going to plummet your credit score. So it's late payments, how much debt you have in comparison to how much credit you have, and then the age, and then your mix of credit. That makes up the 100% in which determines what affects your credit score. That's a very good question. Anyone else? No. Okay, shall I try to end this again or? Well, thank you so much for your attention and your attendance. And I hope that some of the information that I've shared with you today will be helpful as you go forward.